In the past 24 hours, Bitcoin has come down, and we know no alt can escape Bitcoin's gravity. So this particular price path here is reflected through this blue line across these different alts. We can see that Ethereum moves very closely in close directional correlation with Bitcoin, Binance Coin as well. Solana has also been moving in accordance with Bitcoin's gravity. We've seen a degree of strength in BNB and Solana a degree of weakness. XRP has been moving in directional alignment. We're seeing now that Doge is starting to strengthen. This is actually quite a good sign. At the current time, ADA Cardano is all over the place. We can see that it's just pulling back just quite substantially at the current time. And total crypto market cap moves in pretty much lockstep with Bitcoin. If you want to know what's happening with your alts, please look at Bitcoin. That is the answer. Let's extend our analysis a little bit further. This white line is the Nasdaq Futures Index. Now, what is the Nasdaq Futures saying? It's saying it's coming down. We have a rule that Bitcoin cannot escape the stock market's gravity, and that is playing out at the current time. When looking at Ethereum Classic, it's following Bitcoin's directional momentum at the current time. Litecoin is both under and over-exaggerating Bitcoin's momentum at the present time. It looks pretty interesting. And we can see Bitcoin Cash just following Bitcoin really obediently. Pepe or Pepe following Bitcoin's gravity. Floki is also doing the same. Tron is all over the place. It's following and it's not following, and it does this regularly. And when we look at NEAR is following Bitcoin's gravitational pull. Always remember, gravity is gravity. Even though we can get particular alts just diverging or inverting from Bitcoin's gravity, that gravity will pull them back into alignment. So that's something that you want to keep in mind. I hope this helps out Brett. There's been a barrage of indicators released inside the service. Inside the service, if your indicator is old, you'll notice this new little recycle indicator. It's in purple. It's next to the actual indicator. You just press, when you get to it, you just press that and then update to the latest version, and you will see it presto like magic update across your charts. Just look out for that little icon. And there you have it, all done. Thank you very much, TradingView. When looking at the main markets, we've seen the VIX just spiking up recently. We can also see that the Nasdaq is following and Bitcoin are following each other. It's very important to just gain the signals. And one signal that you can gain, if Bitcoin, which trades 24 hours a day, 7 days a week, is weakening, that's pointing to the major indices weakening as well. Bond futures are coming up and yields are coming down. The DXY is coming down at the current time. When yields come down and the DXY comes down, usually we get a bit of a rally inside gold and also crypto. And we're seeing that oil is going for it. Back in November of 2022, we had capitulation inside the crypto market, and we saw that Bitcoin came down to literally 16,500. So many people wish they could have bought at that time. My favorite saying is everybody wants to buy the bottom, but the same people that want to buy the bottom are not there when the bottom occurs, unfortunately. Personally, I really don't care what price does. I simply look at structural levels and make all my decisions from that. As LGRC01 said, I am structurally biased. Bitcoin is certainly acting like a really bad child at the moment. It's playing up. Look at these. This particular structural support, it's been violated. Oh, Bitcoin, how could you violate structural support? The next level of structural support is around the $51,000 mark. Around the end of July, I drew this fractal out, and this reflects the sell-off, the C19 sell-off. I'm not really expecting a C19 sell-off, but I did that because I wanted to impress upon people the fact that you need to think three-dimensionally. But everything comes down to structure. We definitely have a weakening structure at the current time. We're getting all sorts of cross-unders, and that is not good for Bitcoin. But this is not something to be concerned about. And if you're trying to seek out the bottom of anything, you're going to have a troubling time inside financial markets. The bottom is always below where you buy, and the top is always above where you sell. So don't worry about it. Aim for the sweet spot. Now, how do we find the sweet spot? Well, the first thing, we need to be aware of how Bitcoin impacts the alts. The reason that I showed you so many alts at the start is I want to impress upon you that as Bitcoin moves, so does the entire alt market. If Bitcoin is coming down, we've got a good chance that the stock market is coming down. The major indices of the stock market, all of their components, for example, Apple, Tesla, Microsoft, Google, Nvidia, you name it, they should also be weakening. But if they start to strengthen, that could mean the indices are just flushing out weak hands and going to make a movement upwards. Around September, October, it tends to be a little bit negative, so we could get some downside volatility. But if you know where the safety nets are, and if you know what's going on, it's a completely different perspective that you have. You can take advantage of these things. All charts are intercorrelated and interdependent. When you want to know how low Bitcoin can go, don't just look at Bitcoin's chart. That's a newbie mistake. You must also check out the charts from the stock market. For example, the Nasdaq, the S&P 500, the Russell, and the Dow. Also, check the stock subcomponents such as Nvidia, Apple, Microsoft. Tesla is particularly good, and MicroStrategy reflects Bitcoin inside the stock market. You want to look at those structural levels. And you also want to bear in mind what the DXY does is very important, and what yields do is very important. Just literally movements inside the yields can reflect a completely different outcome for Bitcoin, crypto, and also the stock market. What I've been saying for about the past week is that you need to know the structural levels that exist below Bitcoin. We have literally a negative fair value gap between where we are now down to around the $51,000 mark. And unfortunately, we don't have that much structure there. And we don't have that much structure at the 48,000 either. But what you will typically find is though something can just pull itself down, it can also reflect back up very, very quickly. You can make a lot of money from trading things like this. But Ken, I'm not a trader, I'm an investor. I would ask you, seriously, if the markets are just going all over the place, you can make money trading, but as an investor, you're going to get skinned alive. Therefore, having a trading skill and an investing skill would seem pretty sensible, actually, because what do traders do? They get in and they get out. They're in and out all the time. What do investors do? Well, they buy when it's going up, and hopefully they just scale out at the right time. But that is very difficult to do if you've not trained your selling muscle. Let's zoom in and put on the structural levels for Bitcoin so we have a little bit more granularity and we know what's been going on. There was structural support just below or just above the 56,500 mark. We also had structural support just below the 56,100. These structural levels will capture price, and what we do is we look towards the right when we're looking at structure. We don't pay too much attention to other just statistical indicators that many people look at. As a former lecturer in first and second year statistics, a lot of people don't know what goes into statistical measures when it comes to financial markets. A moving average assumes a normalized distribution of price behavior. That never happens. Price is just chaotic. It's completely skewed to one end or completely skewed to the other end. In other words, it has very high kurtosis. Now, what is the problem with that? It's like saying, I've got one arm in the fire and one arm in the freezer, and guess what? I'm average temperature. That's what indicators that we put across charts do all the time. Moving averages can be be good at just determining what a particular trend is doing. Is it weakening? Is it strengthening? That's not bad. But when it comes to making buying and selling decisions based on moving averages, you're going to be in a lot of pain. Therefore, you really need to know where the structural liquidity levels are inside the markets. That's what smart money does. It understands at this particular level, there's people coming in to support price. It's a structural support level. At this level, it was a structural resistance. We got across, made a series of lower highs, broke down and are under testing it. So we're probably moving back to the 56,000. If we don't hold this particular structural level, we're likely to move down to where we estimated C yesterday. I'll just show you a little bit under that so that you can gain a sense of where a sell-off could go to. What we were talking about in yesterday's video, where do you think it could go? To A, just all through all of this resistance, just hover around B where we were, or come down to C. You can see that it was structurally maintained throughout the course of all of this price action. This is how powerful structure is. And if you don't believe that, just go and have a look at yesterday's video and compare this video to that video. It will show you incredible outcomes. All right, let's have a look at the lower structural levels. So we're seeing a lower structural level around that 54,185 mark. So if we start to lose structural support, and this has been an important one, if we lose structural support around that 56,000, this is quite light and it has a negative fair value gap. It's not likely to hold price, so we are more likely to move to 54,100 if we get negative price momentum. Now, what typically people do is that they just basically say, okay, well, I'll only have one perspective on it. It must go down to 54 because if it goes up, I can't deal with that. It's just got to go in one direction. It's really much better to approach the concept that price is just moving between structural resistance and structural support, from structural support to structural resistance, back to structural support to structural resistance, and so forth and so on. How do you know if it's going to go up or down? The actual price will give you an indication. If it cannot make a higher high than when it came in, it's in all likelihood going to decay next to the lower structural support. If it can breach that high, it's in all likelihood going to go up to the next structural resistance level. It's not too shabby. It's not hard to understand, but you must keep your eyes on the structural levels. Developing your strategy so you always think in terms of structure is quite difficult to do. It could take many, many years to understand this is just the way the financial markets work. So each day I try to give you a little bit of an exercise on what you think will happen. Are we likely to just hover around B, just consolidating? Or do you think we'll break underneath B and head to C or below? Or do you think we'll just come back up to A and scare the hell out of the shorts because nobody would be anticipating this? The vast majority would anticipate that particular price action. Very few would anticipate that action. So please let me know in the comments what you think. I'd like to give you a bit of a different focus on looking at financial markets. You can look as a bull, the price has to go up for you to make money. You can look at it as a bear market. Price has got to go down, so you'll be shorting all the way down. Or you can just simply buy on red and sell on green. A BORSOG market. A BORSOG market is always in operation as price simply moves between structural resistance and structural support and structural resistance. It doesn't matter if the price is coming down or it's going up. It's always doing that. This is how price actually works. If you do the BORSOG way, you can be profitable in any market condition, and that's going to be really important over at least the next year. When you focus on a BORSOG market, which is just looking at structural levels and the intercorrelation and interconnection between charts, you don't give a hoot about news stories. You're going to get camps out there that say, oh, it's going up, and camps that say, no, it's going down. And you'll get them in a permanent camp as well, permanently going up no matter what price is doing, and permanently going down no matter what price is doing. Both sides sound very, very knowledgeable and very, very effective, but they have a habit of never getting in and doing anything. What we want to do is that we want to be in the market, but be in the market intelligently. You know that there's a bit of a negative fair value gap, light structural support, and it could overshoot. This means that you can get some pretty good and juicy long tail rejections that could just go up. And this is what capitulation candles always do. You can take advantage of these moves. Now, how do you do that? Just take a little bit of your portfolio, if you're an investor, and just subscribe it to trading. Say maybe take 10 or 20% and divide that into 10 equal dollar amount levels, and then just keep the rest for investing. And just find out where the structure is and put your money on those levels so that you can experience what it's like to engineer your brain to buy on red. 95% of people simply lose money because they buy on green and they sell on red. It's the death of 1,000 cuts. People are always getting wrong-footed by the financial markets. There's so many memes out there. Oh, I've been looking at this stock for 2 years and I buy right there and then it does this. Or I just sold my stock and I held on to it for 2 years and it just did that. Everybody understands those things. And if you think structurally, you'll actually know why. From my focus, there's no bull market, no bear market, there's just a BORSOG market. And we always think in terms of 3 dimensions, a down dimension, a neutral dimension, and an up dimension. This may sound really counterintuitive, but Rule 7, buying creates profits. If you buy effectively, it doesn't matter where you buy, so long as you're buying well, you'll be in profit or will be there very shortly. This is a trading mentality and a really good one to have. To move from fear into confidence, we have to just get away from buying on green and selling on red. Don't forget, we are biologically programmed to survive. We're biologically programmed to crowd follow. Whatever the news and media says, they must be correct. All their stories must be correct, even though those stories change on a 24-hour basis. Instead, we look at structure, becoming independent from the market, understanding the price reality is the only reality, looking at the charts, how they intercorrelate and how they depend on each other, and then buying on red and selling on green, with our 3-dimensional thinking playing out at all time. And the most important thing is to just learn from our losses. When trading and investing, it's very important to keep positive. You need daily positive affirmations for abundance, financial success, and happiness. It's really easy to be positive when everything is going your way, but it doesn't count then. When it really counts is when things are not going your way. This is when this creed, the CTKS creed, is very important. Just always know that life pullbacks will give you the strength for the next life rally. A very powerful I statement is, I am dedicated and committed. I win or learn and never blame. Typically, what happens inside the market, if the market goes down, everybody's just looking for someone to blame. Anything. Could be the government, could be, I don't know, just pick a target. And if it goes up, of course, it's all us. This is not the way the world works. If it goes up, we've just obeyed the laws of structure. If it goes down, structure is being obeyed. So therefore, if you know where the structural levels are, that's what you need to do. But you also need to re-engineer your thinking. You need to literally short-circuit survival mechanisms. That's why if you blame and say, no, it wasn't me, it was someone else, it's something else, it was aliens, it was whatever it was, but it wasn't me. All that means is we either blame or we learn. If we learn, we're going to win because we change our behavior and meet the market where the market is at. This is an incredibly important thing to do. If the markets get turbulence, you can always scale down, and when you're in sync with the market, you can scale up then. You are always worthy, and if you go slow to go fast, you're going to succeed. And always remember, opportunities reset as well as life every single day. Therefore, and a big component of what we do here is positive excellence. We can show kindness, integrity, and gratitude each and every day because we're in a cooperative universe, and that universe wants us to succeed. Unfortunately, when things don't turn out, we tend to get entitled or we tend to get into blame, conflict, and jealousy. This particular analysis is the 4 stages that all investors and traders progress through to become consistently profitable and attain real wealth and positive excellence. The first zones are the I don't know what the hell I'm doing zones, and they occur just across the board in anything new you get into. And it's quite possible that people can stay here for many years. But sooner or later, they understand that they need to change, they need to learn, they need to move away from certainty that is one-directional price decision making. They need to move away from low knowledge zones because low knowledge is a horrendous thing in any endeavor, but in financial markets, it's really bad. Therefore, we have to migrate to Zone 3, which is the patience and rule zone. Here you can make money, but you're not necessarily having any inner peace about what you're doing. Mastery of fear and mastery of human emotion occurs inside Zone 4. And Zone 3 and Zone 4 are all about probability and rules. We're just thinking about everything differently. These are the very high-level knowledge zones. The more knowledge you have, the safer you are. There is a bit of a caveat on that. Unfortunately, there's a lot of retail people that are teaching. Retail knowledge is exceedingly dangerous. Institutional knowledge is what you need. You literally need to change your thoughts, your behavior, and how you look at just about everything. At the start, it's going to be quite unpleasant, but as you progress further and further, you'll understand certainty is not what you were ever looking for. You were just looking for a way to handle certainty, and that way is to know the probability. Scaling up, scaling down, that's a very good thing to do. Having lots and lots of different rules that you've learned through your losses, that's also a very good way to go. Everybody's life purpose is exactly the same. It's to be all they can be. And to be all we can be, we need to have gratitude. In gratitude, we find that the world isn't half as bad as what we thought. It's in fact pretty damn good. Having integrity is incredibly important. Doing the right thing when other people are not looking is the key. Having learning as your focus, humility and patience is also vitally important. A lot of people think that they can just push the markets around and bend the markets to their will. Those people are in for a very rude shock. In other words, we have to show great respect for the markets. If we don't show respect for the market will smack us around unforgivingly. Having respect for the market just means know its structural levels and have no stories. What we're really focused on when it comes to positive excellence is inner peace and outer peace. We're enough as we are. When you're inside the markets, persistence and commitment are incredibly important. Always think about being kind to yourself and being kind to others. It just means that not only you're a good person, but also you're being good to yourself, and that's the key thing. Solving your problems with positive excellence is absolutely the way to have a beautiful life. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.